Good day Forex trader. Your USD Forex signal, crash to 1.1100 is highly likely. The pair will likely continue falling with the next key reference level being at 1.1100. Bearish view. Sell the Euro USD and set a take profit at 1.1100. Add a stop loss at 1.1400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1350 and a take profit at 1.1500. Add a stop loss at 1.1250. The Euro USD pair tumbled in the overnight session as investors reflected on the Jerome Powell reappointment. The pair has dropped in the past 3 straight days and is currently at the lowest level since July 9, 2020. It has declined by more than 8% this year. Jerome Powell reappointed. Joe Biden made an important decision on Monday. In a statement, Biden decided to reappoint Powell for his second term as the Fed chair. He will be deputized by Lael Brainerd, a Democrat. Biden was torn between two sides. On the one hand, moderate Democrats were in favor of Powell, a Republican who was first appointed to the Fed by Barack Obama. Most progressives were in favor of Brainerd, who they hoped will help boost regulations in the financial sector. Therefore, the Euro USD pair declined because analysts expect that the Fed will maintain its policy. In the past decision, the bank decided to maintain interest rates unchanged. The bank also started to tighten its policy by reducing the size of its quantitative easing, QE, policy. Analysts believe that the Fed will continue tightening as the U.S. economy continues to improve. Data published this week has painted a picture of an economy that has recovered. The labor market has tightened while inflation has jumped to the highest level in more than 30 years. The situation is different in Europe. While inflation has risen, the region's unemployment rate is still at elevated levels. At the same time, the new wave of COVID-19 has led many to worry that the economy will underperform in the coming months. Therefore, there is a high probability that the European Central Bank, ECB, will be among the last banks to tighten. The Euro USD will react to several important data from Europe. Germany will publish its GDP data while market will publish the latest flash manufacturing and services PMI numbers. Euro USD forecast. On the daily chart, we see that the Euro/USD pair has dropped sharply in the past few months. As a result, the pair has dropped below the 61.8% Fibonacci retracement level. The pair has also moved below the 25-day and 50-day moving averages. Most importantly, it has fallen below the important support levels at 1.1530 and 1.1715, which were the lowest levels in October and March, respectively. Therefore, the pair will likely continue falling with the next key reference level being at 1.1100. GBP USD Forex signal, very bearish after Powell appointment. The pair will likely keep falling. Bearish view. Set a sell stop at 1.3380 and a take profit at 1.3300. Add a stop loss at 1.3450. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3460 and a take profit at 1.3550. Add a stop loss at 1.3400. The GBP USD pair made a bearish breakout after the relatively strong US existing home sales data and after Biden announced his Fed chair pick. It dropped to a low of 1.3390, which was lower than last week's high of 1.3515. Strong US data. The US and the UK have released strong economic numbers in November, signaling that the Bank of England, BoE, and Federal Reserve will maintain a relatively hawkish stance. For example, in the US, the unemployment rate has dropped to the lowest level during the pandemic while inflation has risen to the highest level in more than 30 years. Retail sales also surprised as they rose by 1.7% in October. On Monday, data from the US showed that existing home sales rose from more than 6.29 million in September to more than 6.34 million in October. This was a 0.8% increase. Similarly, in the UK, data showed that the unemployment rate has dropped, inflation has surged, and retail sales did well as the holiday season started. Therefore, analysts believe that the Fed and Bank of England will continue tightening in the coming months. The GBP-USD pair declined after Joe Biden reappointed Jerome Powell to become the next Fed chair. He was competing with Lael Brainerd to become the next chair. Lael will now become the bank's vice chair. Therefore, analysts expect that the Fed will have continuity. This means that it will continue its gradual tightening process. The pair will today react to the latest flash manufacturing and services PMI numbers from the US and UK. Analysts expect the data to show that the UK manufacturing and services PMI rose to 56.3 and 54.6, respectively. In the US, they expect the data to show that the two PMIs also remained above 50 in November. GBP-USD forecast. The GBP-USD pair made a bearish breakout on Monday. Before that, the pair was forming a bearish flag pattern, which is usually a bearish sign. The pair also moved below the 25-day and 50-day moving averages. The MACD managed to move below the middle line of the MACD while the Relative Strength Index, RSI, has also dropped. Therefore, the pair will likely keep falling. This will be confirmed if the pair manages to move below this month's low at 1.3352. AUD-USD Forex signal, bearish. Key support levels above 0.7150 are coming into sight. Today's AUD-USD signals. Risk 0.75%. Trades must be entered before 5 p.m. Tokyo time Wednesday. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7271. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7187, 0.7154, or 0.7149. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD-USD analysis. I wrote last Tuesday that we were seeing a consolidation pattern emerging between 0.7321 and 0.7390. I therefore thought that the best opportunities ahead in this currency pair would be likely to be either a long trade from a bounce at 0.7321 or a short trade from 0.7390 again. This was not a great call as the price began falling and has continued moving downwards ever since. The US dollar index in recent days succeeded in breaking above a long-term resistance level and has continued to make strong advances against most currencies, with the Australian dollar no exception. However, the US dollar is breaking into blue sky against the euro and the Japanese yen but has not got there yet against the Aussie. It looks likely that there is enough bearish momentum to keep the price moving downwards over the course of the day, in the absence of any scheduled data releases which could reverse this trend. There are support levels not far away, with the two clustered levels around 0.7150 looking most likely to hold up if reached. It would be logical to look to sell reversals from swing highs on a short time frame chart in this pair today, but you may have better luck trading the two major currencies pairs which are seeing the USD in blue sky, long USD JPY or short EUR USD.